already aware of any basic tax law or in your UG subjects, or you haven't learned tax law in your UG? Maybe tax law comes in the final or final year. Yes, where shall I begin? From the basic, yes, or
from the basics, ma'am.
From the basic.
Okay. So, tax law is something which is common to all the people of India, irrespective of their caste, irrespective of their gender, and everything. And also, taxation has its provision in a constitution, which is Article 265, which says only a prescribed authority can levy tax on the citizens of its own country, which is the citizens of India. And when this taxation or paying of tax habit started in early 1960s, we are in 2000s. It started in early 60s, where farmers, if farmers harvest 4 or 5 gallons of wheat or rice, they have to give half or a single gallon of rice or wheat to the king or the people who are there. So it started from there, and in 1986, tax law began in India with an act, Income Tax Act of 1861. That was the first act, which had only few sections and few chapters, levying only basic taxation only in their salaries and in their personal income. So after that, after the various amendments, now the Income Tax Act of 2001 has been prevailing, and Finance Act of 2025 is prevailing, which was introduced in March 2025. And income tax has 5 heads of incomes, where you will be taxed under these 5 heads. Firstly, your salary, which is paid by your employer to the employee. If you are an employee, the salary paid to you by the employer will be taken into account. And second one is the house property. If you are giving a rental, if you are receiving any rental income, or if your house has been let for lease or agreement of rent for these many years, so that will be taken as income from house property. And income from capital gains. Capital gain is nothing but the income received by the same property with a year's gap. If in 2010 you buy a land for 10 lakh rupees and in 2025 it becomes 50 lakh rupees, then your capital gain is 40 lakh rupees. The increase in the rate of land is the capital gain. So capital gain can be used also in gold and diamonds and silver. So before there was the gold rate was only 3,000 or 2,000 before 10 years, and it has drastically increased into about 9,000 up to date. So that is the increase in capital gain. If you have brought 1 kg of gold before 10 years and the value compared to now, the increase in value is the capital gain. And income from business or profession. So usually lawyers and advocates IT returns are filed under this head, which is the profession and business, because they don't get income from any employer, and they earn by themselves, and they are the one who earn by their own business and profession. And income from other sources. Gambling, lottery tickets, and any other gift or any will fall under other sources. Also, your marriage gifts in cash will also fall under income from other sources. So these are the 5 heads of income that are in taxation now. And when a person receives some amount of money in his hand, he has to give some amount of money of his income to the government, not from his savings. This is purely from not from his savings, purely from what he receives in his hand in the prescribed assessment year. For the year 2024 to 2025, if I am receiving income of 30 lakh rupees, I am eligible to pay tax for that 30 lakh rupees, and not the saved, whichever the amount I have saved after spending everything. This is for the salaried persons, and for business and profession it differs. So if you are doing any business or any profession, for example, if you are doing a hardware business and you get a profit of net worth of 20 lakh rupees in that assessment year 24 to 25, and what will be taken into account is you will be having deductions under 80cc and 80d, and also under chapter 6e. So in these deductions, what and all will be deducted is if you buy any machinery for your hardware. If you buy any machinery worth rupees 10 lakh rupees, that will be deducted. From if your profit is 30 lakh rupees, 10 lakh will be deducted because that amount is used to increase your business or profit. That machinery is used for increasing your business capability and also frequency. It also includes the renovation and repair charges, the salary given to your employees, or any other. The transportation charges will also come in this. For business and profession alone, the profit earned after all the deductions will be taken into account. And for
Good evening, madam.
yes,
Good evening, madam.
good evening. So for business, for salaried person, it differs. You have to pay tax based on what you receive in your bank account. The bank account on the date of April 1st to March 31st will be taken into account, which is April 1st of 2024 to March 31st of 2025 will be taken into account. So is that any doubt till now?
No, ma'am.
Okay. Then we can move to how we can file IT. So if I'm a person earning about 20 lakh, or I'm having clients IT returns for your reference, I'll be sending it to your coordinator and she will share it to you in your groups. Okay, for IT returns there are many type of ITRs, which is 1, 2, 3, 4, and much more. And each person will be having a different ITR. So a salaried person will be having ITR 1, which is the most prevalent or most frequented ITR in India.
Madam,
Yes.
any salaried person after his retirement, he is enjoying the pension. After pension, after receiving a pension from government, will he got any another service that income tax can be compulsory for the income tax?
Yes.
What is the rule?
For pension also it is compulsory. There is a different tax rate for persons above 60 years and above 80 years. So if you are a person above 60 years, your tax rate will differ apart from this. The current slabs for this assessment year 2025 to 2026 is 0 to 4 lakhs, you will be paying a zero nil tax. For 4 to 8 lakhs, it is 5%. For from 8 to 12, it's 10%, and 12 to 16, it's 15%, and it goes on till 24. For about 24 lakhs, it is 30%.
No, that is not my question. My question is, he is enjoying pension. After pension, he joined in another private service.
Okay.
Another service.
Okay.
In that purpose, in that case, it is a compulsory to give that pension of that another income in case of senior citizen.
Yeah.
Will it disclose or close? In case of pension, there is a mandatory instruction. It is your payment. You cannot do any permanent service. A pension, you have enjoyed pension, so you will not get any service.
No. Who said?
After retirement, there is a in government pension. There is a declaration. I am after my retirement. I have enjoyed the government pension as per rules. So after earning that pension, can I get another new service after retirement? Pension and another income from service.
You can get. Even High Court judges after retirement will be posted in tribunals and many other, example, National Green Tribunals. The chairman or the head of the National Green Tribunal is the former CJ of India currently. So you can have your service even after your retirement, and both your pension amount and the current honorarium you are getting will be calculated in your IT returns. But only the slab rate differs because of your age.
There is a ratio of pension started, ratio of income tax. Suppose a service holder in quarterly sum you have the due of income tax, then interest upon that income in quarterly you fail to do that. If you want to have an idea that we can make in a February, we will take all the income taxes due. But before that, there is a penalty imposed. What is the rules of that penalty imposed? in a quarterly.
For penalty imposed, you will be penalized into 3 times of what you have to pay without penalty. If your IT is 50,000 rupees, which you have to pay currently without any penalty, without any CIT's reference or complaints, it will be 1,50,000 after your penalty into 3 times. So I have shared the ITRs, which is 1, 2, 3, 4, 4S and 5. So here ITR 1 is followed mostly by the Indian citizens. About 80% of the people follow ITR 1 because mostly every citizen is a salaried employee in India. So I request everyone to take your mobile phone and type e-portal income tax in your Google. E-portal income tax. The main income tax department website will pop in, which will ask you login details. So for filing ITR, you can file ITR by sitting in your home. You can just log in into the account with your own credentials and with your own net banking account, which is the account that is used to. For private employees, pension amount is taxed. For government employees, pension amount is living free, no tax.
Excuse me, madam, what I have to write in Google? Type
e-portal income tax.
Okay, madam.
Hello, madam. What is Section 154, Rectification of the Income Tax Act 1961?
Section
They sent a message to me in my mail from the IT department, rectification order of under Section 154 of the Income Tax Act 1961.
Okay.
So what is that? They have 2022-23 demand for. Already I filed an rectification of that. Before that, the return was seen in my mail, but I cannot physically in bank account that return. After that,
sir, I can explain this only if I see your petition and if I see what mail you have received.
154 of the Income Tax Act, what is that?
154 of the Income Tax Act is when the CIT or Commissioner of Income Tax penalizes you or reminds you of paying your tax, and you go for nothing that your tax is already paid.
Oh, that is the rectification.
Okay, you have to file or compute your tax assessment in Form 26 again, and you have to file it to the CIT.
Okay,
you have to do it from the beginning for clarification.
Okay.
So the login page arrives for you. So you have to enter your Aadhaar number and PAN number, which is the personal identification number, which everyone has. If you enter that, the income tax portal asks you for many other questions, which is required to file ID. So after your credentials are filed, you will be getting Form 26A to be downloaded and Form 16 to be downloaded. I'll send the model of Form 26 and Form 16. You can have a look.
Madam, excuse me, there is showing up some kind of e-filing browser.
Sorry, sir?
Madam, excuse me, there is something showing e-filing browser. I have to download it?
No. I just asked you to type to know the website in which the IT is filed by the individual.
Okay, madam.
I have sent Form 26 first, which is the annual tax statement. So after your bank details are filled in the Income Tax Department portal, you will be getting a list of your transactions, which are given by your employee. If you are working under 2 or 3 employees, all the salaried or all the amount will be visible in your tax statement from the date and on which the amount received and how much the amount was received. you can just go through it even now or when you get free time. And after your 26 is downloaded and filed, and you will be getting form 16, which is the tax deduction. For this form 16 is given for the salaried employees and also for those who come under business or profession. So for business and profession, the person have to file the bill of the machinery which he has brought with the GST number. So this was enforced from 2017 after the GST Act was enacted. Bill with the GST number will be applicable. Will only be applicable to get deduction under Form 16 and under 60A or 80 CCD. If it is a hospital bill or if it is a machinery bill, everything there should be a GST number for compulsory. And after the form 16 is filed, you will be asked to compute your income. For example, if I'm having a doctor's profile in my phone, so he has worked in 3 hospitals. He was working in full time in a hospital and night duty in a hospital and on call duty. Whenever he receives a call, he goes there and does his surgeries or something and comes back. So all these 3 hospitals have paid him in the same amount which he has used for receiving his pension. So everything will be added and computed into a single income. I'll be sending you it. Have you received that? If you see, computation of total income as per 115 BAC, new regime. Coordinator can send it to them. Have you received? So that is the computation of the total income. How many ever income he may have and how many ever work he may have been proceeding in his life. He has to file income tax for everything. So for in a hospital he is receiving a income of 8,45,000, and in another hospital he is receiving an income of 6,12,000, and in another hospital he is receiving an income of 3,94,000. So everything will be added, and the amount of tax he has to pay is 18 lakhs and something, 18 lakhs and some changes. So this is the computation of total income. And after your income is computed, the calculation for income is taken place. For this new regime, for 0 to 4 lakhs, it is 0, so it is nil. And for next 4 lakhs, it is 5%. So after calculating the amount of the tax he has to pay, he has to file a TDS returns to the income tax department. TDS is something which is called tax deducted at source. You may have heard many people telling enhanced salary and salary. So a salary is what is his salary, but enhanced salary is received after TDS. So if he's earning income of 50,000 or 60,000 per month, he will be getting an income of only 45,000 or 50,000 in hand. 10,000 will be taxed at his source itself. So while paying income tax, that amount will be deducted. And if the TDS paid by him is above the amount what he has to pay, then it will be refunded. You can understand? I hope so. And any doubt till the computation of income? Yes, no, anything? Okay. So after completing, you will receive a message after or within 30 days of your completion. The CAT, which is the Commissioner of Income Tax, the main office for Southern India, which consists of 4 states, which is Tamil Nadu, Andhra Pradesh, Karnataka, Telangana, and Kerala, five states. It is present in Bangalore. CIT head of your IT returns and files to find out whether you have filed the income tax properly, or you have any evasion, or any you have done any avoidance for your sake. So after compiling that, and okay, after the CIT is satisfied that your income tax is well and good and everything is fine, then you will receive a mail from the mail ID which you have registered, that your computation is correct and you can proceed with your payment. So you have to do the payment within 30 days of the reply from the CIT. So after 30 days, after your payment, you will receive an acknowledgement form that you have paid this much of tax and have paid this much of TDS in your source itself, and this is your tax that to be paid, and you have paid this much tax to the CIT. So this is the whole process of having of filing a IT and doing a payment. So the I'll send you an acknowledgement form. So you can go through it. You will clearly see the total income, your profit, net tax payable, interest or fee, and everything will be calculated in a single page, and you'll be given an acknowledgement that this much of tax has been paid by you. And that's all. That is all your IT process. If you have any doubt, you can ask in IT, in income tax, filing of IT. Mostly, if my client gets email that they have been evaded their tax, or if they have avoided to pay tax, and if my client has paid the tax in its proper way, then we used to deal with it. And mostly we used to see GST cases, registration of GST, and you'll be seeing GST in the next half an hour. Yeah, first half hour is over for IT, and next half hour is GST. So mostly 90% of the cases are dealt in GST, and only 10% of it is income tax. So for GST, you will be receiving random mails and random notice from the GST Council. If your account that is used for commercial account having a phone pay scanner exceeds about 20 lakhs, you will be given a notice. So not everyone earning more than 20 lakhs is eligible to pay, or eligible to file GST. So we used to handle that cases, that in that 20 lakhs, some of the amount has been used for his own business or profession, and there has been any carry forward or set off in his losses and profits. So he is not liable to pay GST, and he is not a liable person to register under GST. So mostly these are the cases we used to. If you're okay with the income tax, we can move on to GST. What you study, the taxation law, what you study in your UG is only 5% of what you'll study in PG. So when I entered my PG in my first semester LLM taxation law, I was fully blank. I even don't know many provisions of the Income Tax Act that I used to study in my UG. For you will be studying accepted incomes, section 10. That's it. If you go inside section 10, there will be lots of provisions. Section 10, 10 1, 10, 10 2, 10 3, 10 everything. And for exempted incomes, you will be studying only section 80, chapter 6A. That's it in your UG. But in your PG, if you go inside exempted incomes section 80, you will be having plenty of provisions, section 80, CCC, DD, A, everything, which has been noted in nook and corner. So when you are a salaried person who going on old regime, because chapter 68 deductions, 80 deductions is not applicable for what you are, or if you obtain your new regime, which is the new regime which has been introduced in this March. So that then the section 80 chapter 68 is not applicable for you. If you are opting on your old regime, then you can file your exemptions under 80cc, everything. So the salary computation of a person going on to the old regime, having many FD deposits, who have taken many loans, who have many hospital bills, who have many missionary bills, then the total tax paid by him will be below 50,000, even if his profit is above 50 lakhs. So we can reduce every single thing using a bill, using bill having GST number. So if you are a salaried person, a new regime is profitable for you. And if you are a person earning through profession or business, having many loans or having many commitments to your family, you can go on to your old regime. That will be beneficial for this kind of persons, and new regime for salaried persons. For old regime, for section 80C, you can even deduct your child's tuition fee. If you are paying 1 lakh rupee for your child tuition fee, you can deduct that 1 lakh rupee has exemption. But you can't do it in new regime as a salaried person. If IT is clear, we can move on to GST. For GST, GST is brought in one of the first constitutional amendment, which is very familiar and prevalent, happened in the year 2017, and which is prevailing till now successfully. So why this GST was brought, what is to abolish all the other indirect taxes. So income tax is a direct tax, and GST is an indirect tax. It abolished the Customs Act, Customs, VAT, and value added tax, and many other service taxes, everything which was prevailing in before 2017 was all abolished, and new GST was established as a only single indirect tax that to be paid by the person indirectly while buying things and everything. So in 2017, while the GST was brought, it was set to the shop owners who are doing their tradings and who are doing their business and profession and earning more than 30 lakhs to register under GST, so that the person while buying a good for rupees 20 lakhs has to pay a GST of 18%, in which 12%, in which 6% goes to central government and 6% goes to state government. And that 6% of the GST paid by him will be refunded if he has a GST number registered to him. If there is no GST number registered to him, he cannot avail that refund and privilege for the same, for getting a refund of the amount which has been paid by him. So GST is an act which has a plenty of GST acts. So one is the CGST, which is prevalent for all over the India, having interstate transactions between India, and if there is a transaction between Tamil Nadu and Kerala, then you have to apply CGST. But if you are having a transaction between Tamil Nadu, between Chennai and between any other districts of Tamil Nadu, you can avail GST, TNGST, which is Tamil Nadu GST Act of 2017. It is KGST for Kerala GST Act, Karnataka GST Act. So it differs for each state, which is done for the convenience of the state, of the people of that own state. So filing of GST is easy process, but it takes a lot of time to review your business and to review your trading and extra. And the same has to be done in the case of GST also. If you file e-portal GST registration, you will get a screen popping up that is register for now. After opening your GST registration portal, you have to give all the criticals and introduction, which is the PAN number, your business, and how much profit your business is gaining, and what kind of business is it, what kind of account you're using for getting the transactions of your business, and what kind of business is taking place. If you are having two or three branches, it should be mentioned, and the address of the same, the address of the trading center. If you are having a supermarket in some parts of Bangalore, you have to mention the address of that supermarket along with its name before filing GST. And after giving all the credentials, if the GST council, members of the GST council are not satisfied with your way of getting a GST registration, they will directly visit your site. They will directly visit your trading center or your supermarket or your shop, whichever it may be, to have it a look in their through their eyes to note whether this trading center is eligible or does it deserves a GST number or etc. So after everything is accepted, you will get a TRN number which is valid only for 15 days. Before 15 days, you have to reach the GST mail, which will be transferred by you by the GST council, and you have to reply to them regarding the mostly they'll be asking the pictures and videos along with the G photos. G photos will come with the time, date, and address also. I hope many of you will know that G photos, G tags photo. So the photos and videos with the G tags has to be sent to the GST council, and after verification, you will be given a GST registration number. So the TRN number having merges will be submitted to the income tax department, sorry, GST council. And after the verification is done, after the councils had a look at in your business or your trading center in their presence, you will be given a GST registration certificate permanently. Once you have registered for your GST, the GST number is permanent. You don't have to you just have to renew it in 5 years, but the number doesn't change. After 5 years, you have to remind the council that your business is still existing and you still want your GST number. That's it. I'll send you a copy of GST number, GST registration files. Just a second. Yeah, I have sent it. So you will be having a GST registration certificate, which is received through the GST Act. The GST number which is mentioned in the very first line after the registration certificate will be your permanent GST number, and whatever the invoice you give to your customers or clients, the GST item number is mandatory. You can just go through it. For GST, you have to get permit within states and intrastate also. If you are buying and selling goods within a single state, then the process will be very simple and you can complete within 15 to 20 days. But you are selling your goods or receiving the goods from other states as well, then your process will be higher. The receiver or the sender has to pay GST for both the council, which is CGST and also SGST, for the central government and also for state government. Then the process of filing GST and getting GST registration number will be lengthy for those who are having a very vast business. If you see a period of validity from the year to NA, which is not applicable. Not applicable in the sense it is valid for lifetime till you vanish the business or abolish that business. If you have any other doubt in GST and IT, may I ask? Yeah, you can unmute your mic and ask. So, mic.
Excuse me, madam.
Yeah.
Will you shortly brief his GST? I couldn't understand what is.
GST?
That you told that GST. I couldn't understand process, madam.
The whole part of GST?
No, madam.
Which part or the whole part?
In between the last part.
Which is the interstate and intrastate state transactions?
Yes.
Yeah. Okay. For filing GST, for paying GST, you are having two kinds of GST, which is SGST, state GST, and CGST, which is central goods and services tax, and SGST is state goods and services tax. If you are buying or selling goods or any services within a state. If you take Karnataka, your transaction between Bangalore and any other states of Karnataka, then your GST will be 12%, which is 6% for CGST central and 6% for state. So the 6% of the amount will go to central government and the 6% will be used by the state government. Let us see interstate transaction. That is the interstate transaction, and interstate transaction is transacting between Tamil Nadu and Karnataka. Where two states are involved, it is called interstate transaction. And if you are buying and selling goods in between the states, you have to file three types of GST there, which is three GST in this case, which is the GST for the central government, which is 6%, and in SGST. Karnataka will take 3% and Tamil Nadu will take 3% out of that 6%. That is interstate. Clear? Sir, it is clear? And any other doubts? That is only called integrated GST, which is 3% for Tamil Nadu and 3% for Karnataka. That is IGST. Integrated. That is integrated with 6% and SGST separately 3%, 3%. The doubts? For international transaction, the methods and the whole process is different. For international transactions, yeah, someone is. Sir, you want to speak or shall I continue? For international transactions, GST is not applicable. For international transactions, you will be going on with Customs Act, where you will be taxed in the airport and harbor itself. You will not go to the consumers and the receivers, consumers and the sellers. If the seller is sending a bulk product of 2 tons of any product to other country, it will be taxed in the harbor, in the source of that country, and also in the receiver's country. The seller will be giving some percentage of tax, and the receiver will be giving some percentage of tax and receiving its goods. This is a simple term I used here, but the process is different from the GST. It differs for percentage. It differs for each commodity of goods. For clothes, it's only 10%. 10% of what you receive, and for electronics, it is 15 to 20% depending upon the um, price of the price of the good, and also the value of the good. And for example, if you take chocolates, even dairy milk is taxed for 15%, yes, and Kit Kat and Munch is taxed for only 10%, because there is a provision in Customs Act that Kit Kat chocolate, there is a major landmark case which is Kit Kat versus Dairy Milk, in which Dairy Milk is considered as chocolate, but Kit Kat or Munch is not considered as chocolates. It is considered as wafers, just to reduce the taxes, which is 8% for wafers, and for chocolates it differs above, which is mostly it's double for chocolate and half of it for wafer. For services, it won't be taxed. Only for the it depends upon the value and the type of product. Services will not be charged, because the service is done by the receiver and seller itself. The receiver has to set up his products. Yeah, you can use. The percentage of share will be shared by the native country. For the customs, the taxing at the airports of India, the Indian government will take. It is not refunded it refunded to the sender and receiver. It is refunded to the consumers in their ports. For example, if you go to Arab countries, you will get gold in less cost. So if you show the bill of that gold bill to the income tax authorities, you will be refunded the tax for that gold. But it is not. But the refund is not given to the bulk products. When the refund is given is when you have paid high amount of tax in your native country, and you have paid low amount of tax in your receiving country, then the receiving country will be receiving a refund, but not the receiving country. Am I confusing? No. See, if you are giving a tax of 20% in India, and the receiving country gives only 10% of tax while receiving, then you will be given 5% of refund for the products in India. Banks don't involve in these kind of transactions. There is no link between bank and this. the money transaction between countries. I only deal with tax or tax for products. That's it. You can use double taxation avoidance agreement if the bank doesn't give you any refund. So you can go under section 9 of ITI for India, but it depends upon the country. If it is the country where India has signed the agreement with that country, you can apply for double taxation avoidance agreement and you can get your refund. But if the country you are transacting your money is not having any agreement in India, you cannot get any refund. Anything else? There won't be any impact for the native country and also for the distant country. Both country will be opting only for the profit. If you take Mauritius, if you are having any transaction between India and Mauritius, the refund or the tax rate is very low because the agreement within India and Mauritius is that they have to get only minimum tax to the taxpayer, and it should benefit only the taxpayers, not the government. So for Canada, for Dubai, for Mauritius, and few Arab countries, the taxes will be low. That will be beneficial for the taxpayers. But for other countries like US or Japan or any other, even European countries also get more amount of taxes, which is beneficial for the country and not for the citizens. That usually USA tax the same because USA wants us to pay tax what we are bound to pay in our country itself. Because many people from India are opting US jobs so that they can earn more and give less tax. So USA has brought it before 1 week, I think. Trump or someone has announced they have to pay 5% of tax if you are transacting between USA and any other country. If your sibling or someone is working in USA and they are paying 1 lakh rupees to India, they have to pay tax.
Thank you, ma'am, for taking the time to share your valuable insights with us. Your expertise was truly enlightening. Thank you for breaking down the complex concept into the into easily understandable parts. We are grateful for your patience and willingness to answer the questions. Your session has definitely enhanced the understanding of this subject, ma'am. Thank you so much.
Thank you.